Hi there, welcome to Markets Tomorrow right here on ET Now in the Mumbai News Center. I'm Tanveer Gill, and the markets had quite an interesting session in trade. There was a significant sell-off in the first half and a significant recovery in the second half. So if you look at the intraday graph, it's a perfect V for the index. Likewise for the broader markets as well. In fact, for the small caps, it was pretty much covering all lost ground in the first half of the session to close with a minor uptick. In fact, the small cap index gained almost about 1% in a quarter from the lows. Let's talk about, what were the key highlights of the session. But before that, the voices lined up on the show include Saurabh Mukherjee, CEO Institutional Equities at Ambit Capital, Sridhar Sivaram, Investment Director in Arm Holdings, Taher Badshah of Motilal Oswal Asset Management, and Shrikant Chauhan, Senior VP Technical Research at Kotak Securities. Among the top stories then, it was really about the index on balance and finally ending above 8100, pairing some lost ground. Like I said, a perfect V being made in intraday trade for the index. Likewise for the Sensex, for the broader markets, except for the metals index, all of the sectoral indices gained some momentum in the last 2 hours. The Bank Nifty also recovered a good 100 points from the day's lows. State Bank of Mysore, State Bank of Travancore, State Bank of Bikaner and Jaipur gained anywhere between 13 to 20% in trade. For some of these banks, it was a whopping 40% gain in the last 2 sessions. So the market is really excited, it seems, about what this mega merger with SBI would mean for these banks, and also from a valuation perspective, whether it can give them some more headroom, given that all of the banks are trading at sub one-time book value from a future book value perspective. And that gives them some cushion to rally further from here. The PSU Bank Index has been inching higher for the last 2 sessions. It's closer to the 200-day moving average. Allahabad Bank, Syndicate Bank, Andhra Bank also gained anywhere between 4 to 7%. Must highlight the other stock story of the day, which was Maruti. And given the yen's sharp rise to a 2-year high, the market was very worried about how this impacts Maruti's overall financials, earnings. Even though the management clarified to Kotak Securities in a note as well as to ET Now that the impact would be limited to 5% of their revenues, and more importantly, the revenues exposed to the volatility of the yen have been coming down consistently. So it's not that much of a story that impacts the business as one is making out to be, correcting that perception in the market. But the stock was still down 3% in trade. The question that we are asking then is that will the Nifty threaten 8,000 ahead of the Brexit vote? There's a while to go for that, a good 100 points. But we have 5 trading sessions actually slated ahead of the Brexit vote. So anything can happen as the volatility and nervousness around the event only increases as we count down to it. Taher Badshah and Shrikant, good evening to both of you. Thanks very much for stopping by and speaking with us this evening. Taher, I'll start off with you. Do you think that the market could go down to testing or threatening 8,000?
Well, it's always hard to call short range movements in the market, but I think it looks like market would want to see this additional leg of the event risk or the uncertainty risk on the Brexit issue out before it can probably look at a fresh direction. So I think I'm not sure whether it is going to probably get significantly hit in the run-up, but definitely there will be a certain amount of nervousness which might continue until then, after which it will probably depend on what is the outcome of it, although at least many of the market participants are probably finding it hard, not just in here in India, but even globally, to be able to figure out as to what will be the direct or indirect consequences of an exit of the UK from the European Union. So it's going to be a bit of an uncertain outcome as well, and therefore even after that we'll have to probably see as to how as to what the market judges as the outcome of this event. So I think up until then we will probably remain a little more volatile as we have been over the last few days, I would reckon.
Is that your sense as well? Shrikant, is that your sense as well, that there's a negative bias to the market?
I think while looking at the overall trend of the market, we feel that the markets are like going to remain in a range because if you go through with the option interest or open interest of F&O market, then it is concentrated around 8,000 and 8,300 strike price. But while looking at the overall trend and the way the event is there, in case if market breaks the level of 8,000 before the event of this Brexit, then again it is going to recover back from lows because lot of buying, lot of investors, a lot of traders, in fact long traders, they want to initiate some long positions in case if market falls to 7,900 or 8,000 levels. While looking at today's formation and today's open and I'm going to say advance and decline ratio, we are of the view that in case if market breaks 8,060, which is the lowest level of last 3 days, in case if Nifty breaks this particular level, then we can expect further more weakness in this market till maybe 8,000 or 7,950 on the downside. But overall the trend looks range bound till the events get unfold.
Yes, that would be the case. Let's talk about the two important stories in the market today. Start off with the mega merger of SBI with its associate banks and the rally. And yesterday we were talking about how the market might be awaiting the merger ratio and what kind of integration process do the banks go through with the State Bank of India. But I think going a bit deeper into the story, it seems like it's really a valuation game because these stocks are trading at sub 1-time price to book. So there is some headroom within these banks to rally from here. Poonam actually joins us to add more perspective on that. Poonam, sum up the story, 40% gains coming in for the associate banks.
Well, if you in fact look at the entire PSU Bank Index, the rally has been led by SBI Associates, State Bank of Travancore, SBBJ, as well as SBI Mysore. Each of them have gained nearly around 13 to 20% each, not just today, but all these three listed associates have gained close to 45% in just a month. And in fact, if you look at the Nifty PSU Bank Index, also we are seeing the Nifty PSU Bank Index inching up pretty much closer to the 200 GMA, and it is Allahabad Bank, Syndicate Bank, OBC, Andhra Bank and the likes getting nearly 4 to 7% each. What is leading to the rally is the perception. The rally in fact has been led by, of course, these SBI associates gaining on the back of the possibility that the SBI associate merger could probably happen very much closer to the book value of SBI itself, and that is what has led to the rally in these associate banks. Because if you look at the associates, they're trading anywhere between 0.6 to 0.7x price to book versus a 1.2x price to book for an SBI. In fact, BofA also cites that the merger probably could be very much closer to the book value if you look at the capital infusions done by the government in the other respective banks. And that exactly is probably even feeding into the rally of the other PSU banks, because some of the participants probably believe that probably the smaller or the mid-cap PSU banks may also trade slightly closer to book whenever the PSU bank consolidation happens.
Thanks very much for that, Poonam. How are you looking at the story? Does that mean, given that most of these subsidiary banks are trading at anywhere between 0.5, 0.6 times price to book, Taher, that there is more upside from here? I mean, even after the surge, there is a bit of a discount that these banks are enjoying. Does that mean that this rally continues? We've already seen 40% in 2 days.
Yeah, I think what is probably going on right now is basically just the speculation around the merger ratios and what it would probably mean in terms of swaps to SBI, the parent. So, and there was a gap which was clearly there between the valuation of the parent and some of the subsidiaries. So, to that extent, it's quite natural that that is getting bridged. Although one will have to see what eventually are the swap ratios which are communicated. But I think the greater excitement around this pack as a whole, and particularly SBI, is more to do with how the trajectory for the bank will shape up in the next 2 quarters as a result, as they come out of having provided for their coverage as far as the NPAs go, and then a more longer term 12 to 24 month outlook as far as how they would operate as a merged entity and how and what kind of savings that would accrue to it. So I think from both those perspectives, SBI probably stacks up reasonably well, and therefore to that extent, on a combined basis, one would expect that the excitement around SBI and now its associates as well would likely continue in the near term.
Yeah, on the charts then, Shrikant, how are you viewing the move in these banks?
I think when we go through with banks, especially like PSU banks, there like if you see the chart of PSU bank, then one can clearly notice that it is relatively outperforming. In fact, it is into breakout mode about 2600 levels, and the next level which we are eyeing is between 2900 2950, which is clearly 10% 15% kind of appreciation even from current levels. So that means that we can expect 15 to 20% kind of appreciation out of stocks. Again, if like really somebody wants to take a long positions in this particular market, I think the way they are like outperforming in this last 4-5 trading sessions, one thing is very clear that they are going to outperform. Yes, in this particular space, if really like somebody wants to go long, then State Bank is the stock to go long, because it is the the most high beta stock in this particular space, at the same time having huge weightage in this particular index, and the formation is clearly indicating us that it is heading for 235 or 240 kind of levels. So in fact, one should look for adding PSU banks to the positional trading longs, and one can even go short on private banks because they are underperforming and they are showing some weakness on daily as well as on weekly charts.
Okay, that's one story. The other one, which was important from a market standpoint, was Maruti, and the perception the market carried that with a rising yen, a yen rally hitting a 2-year high, Maruti's earnings would get impacted, which is why the stock saw a knee-jerk reaction. In fact, as the yen rallied, you saw Maruti lose ground and actually close with a 3% cut. But the management clarified to Kotak Securities in a note, as well as to ET Now's Ajay Sharma, that look, our exposure is limited to 5% of revenues. And not just that, the impact actually is limited to 5% of revenues, and not just that, our exposure to the yen volatility has been coming down over the course of the last few years, and we're working towards that. So they tried to correct that perception so that the market took it in the right context. Taher, are you convinced? And, would you see this as a buying opportunity in Maruti?
Yeah, I would think, while the appreciation of the yen is at the margin negative for Maruti to some degree, and although it will, in our view, also get contained by some of the measures which are being taken by the company, plus exports of a couple of their products which are finding good traction through the parent. So I think there are areas through which they can probably reduce the impact. We will also have to probably see as to how much have they typically hedged in the more recent past, and that would also probably act as a cushion in the more near term to be able to take care of this appreciation in this adverse movement in the currency for them. So they have their own ways to probably reduce the impact. I think. And over the years, the company is right in saying that they have been having a lot of measures in things like indigenization, etc., in order to ensure that the overall impact of currency fluctuations is reduced. And more recently, I think also the premise that some of the new models will be renegotiated and royalty payments and some of the new models will likely probably happen in the domestic currency, the INR. So that will also probably take away some part of the sting as far as currency goes. So I think they have some ways to probably reduce the impact going forward.
That's right, Taher. In fact, Ajay now joins me with a quick run through of what the management told him and how he interpreted that for Maruti. Ajay, tell all.
Maruti came under pressure today on fear that strengthening yen may impact large part of their revenues. But soon after, it recovered from the day's low after management clarified to ET Now that their efforts of bringing down the impact of volatility in yen on their revenues are actually bearing fruit. In fact, past couple of quarters, they've been taking a lot of initiatives like increased localization. Going forward, the royalty payments would also be calculated in INR. In fact, Brezza onwards, their exports to Japan itself will bring down. It's kind of a natural hedge on Maruti because of, part of imports are in yen. So that effect is coming down, and in fact Kotak came out with a report as well of the same. So there was some recovery from days low. Overall the market was weak, so this stock was also under some amount of pressure, but management clarification is likely to go down well as far as the analyst community is concerned, because compared to last couple of quarters, going forward in the next 1 or 2 quarters, their sensitivity to yen volatility will come down very sharply. So that was a big mover in day to day.
Thanks, Ajay, for that, for summing up the story and getting us that ET Now exclusive with the management. But I just want to, take that break, highlight for our viewers some market opinion that we got through this session. And then when we come back, focus on tomorrow's trading day and how you can benefit from it.
Our underlying view on the economy hasn't changed a jot, in the sense that our view remains that the economic recovery isn't really happening. There's very little to suggest that there's an underlying economic recovery. But over the last 3 months, as we have watched the authorities, seen what actions they've taken on liquidity, on measures such as S4A, we've become increasingly convinced that whilst we will not have any quick economic recovery in India, whilst I think the optimism about a quick economic pickup is still misplaced, the banking system is not going to go into doghouse. And that's why I took the crisis call, as I call it. The crisis call was taken off the table. 14 times PE, which led to 22,000, was taken off the table. And we said, let's look at a more modest scenario of around 10% earnings growth in the current fiscal, leading to around 29,500 for the Sensex at the end of FY17.
There will be some collateral damage if suppose Brexit actually happens. There will be some collateral, very difficult to quantify. Currency, yes. I mean, that's reasonably well established that there will be some impact on euro. Short-term things are looking choppy, but if I take, say, a year or 18 months horizon, then I think a lot has happened on the ground, and maybe the benefit of whatever has happened over the last 2 years after this new government has come, possibly we'll see over the next 12 to 18 months. But nothing spectacular, but surely groundwork is there for people to see.
Okay, welcome back. You're still watching Markets Tomorrow right here on ET Now. Very quickly, Taher, what is it that you're betting on in terms of a sectoral play or a stock focus in the markets?
Well, I think basically going forward, the excitement will probably revolve around the recovery of the rural economy, led by some of the efforts of the government, especially things like financial inclusion and DBT, and maybe some of the others, and including even, of course, the progress of the monsoon and its influence on agriculture. So I think that space and its repercussions in terms of different kinds of businesses, which will probably be beneficiaries of that, will be is something that we keep investigating and trying to figure out. I think also the area of some areas of industrial recovery are kind of noteworthy, and probably there is a certain amount of traction building in certain segments. So such as in case of railways and roads, etc. So any of the companies which are probably levered to that area will also find kind of investor excitement going forward, and there could be certain investable opportunities in that space as well. So I think these are some of the broad areas that we probably think there will be a investor interest.
Okay, Shrikant, very quickly, strategies to help viewers in trade tomorrow?
I think the way the uncertainties are there in the market, we should look for FMCG stocks, and especially Hindustan Liver, which is very close to its support area of 860, 870. So with a stop loss at 865, we can take long position in Hindustan Liver, and we can keep a target of some 900, 910 on the high side. The other stock which we like is from the bank sector, and the stock is IDBI. Here also the stock is forming rounding bottom, and on weekly and monthly basis the stock has formed reversal formation. So the next final target for the stock is between 84, 85, but at least we can expect 78, 79 in next 1 or 2 days of time. So here also in IDBI we can take long positions with the final stop loss at 68 on the downside.
Gentlemen, thanks very much for joining us and giving us your perspective in trade. Appreciate your time as always. That's time out on Markets Tomorrow for now. Thanks very much for watching the show.